The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
Welcome back to another episode of The Credit Authority. I am your host, Rhonda Kulch, and we always want to start off each show by thanking our sponsors. So thank you to Equity First. If you are experiencing credit and or financial challenges, feel free to reach out to any one of their trained consultants. They are nationwide and bilingual, and they are waiting to hear from you today. You can be reached at 631-714-4822. And to get today's started, we have an amazing guest. We are going to be sitting with Christine Perlow. She is the producing branch manager of Nationwide Mortgage. How are you?
I'm good. How are you? Thanks so much for the invite today.
I love it. You know, it's always special when we're able to speak to people from the industry, right? So I come from the credit and finance background, and you know, I say my power partners are always the mortgage, the real estate, right?
Yeah,
those, of course. Even auto, because people are running credit all the time.
Sure.
So when I have the opportunity to speak to somebody when there's a market change, I love to hear about their, really get feedback to where you are.
And it's definitely changing faster than we can even fathom right now.
So let's talk about the last few months. Not only has the market changed, but I'm sure that it has weeded out a handful of clients. How do you prepare yourself and how do you recover from such interest rate? I say interest rate devastation.
Yes, it is. It has been very fast moving as far as the rates going up. It has moved faster than any market that I've seen, and I'm in this over 30 years. So this is a whole new market that we're seeing to help get in front of, and you need to keep on top of those pre-approvals because with the interest rate changing as rapidly as it has, you may not qualify, or that buyer may not qualify anymore for a pre-approval they were issued 30 or 60 days ago.
We had on one of our other shows a real estate professional, and they were saying that one of the difficulties was that with the shortage of inventory, clients couldn't find properties they liked when they were qualified
Correct.
at 2.5%. Now, with the interest rates being just shy of 7%, right?
Yes.
Or over 7 for some.
Today it may be over 7. And that is true, Rhonda. And that's where you come in so much, because people don't realize when they see the advertisements online and say, wow, well, I can get something lower than what we may tell them. It's so important to know what your credit score is and how to manage that. And we rely so much on you to help us navigate that credit report and read it well to see what are some tips to get that score up, because people don't realize that in the mortgage industry, it's risk-based pricing. So the better your score, the better your interest rate's going to be. There is a direct effect on it.
Absolutely. And we see that too with our clients in the auto industry. They'll call us and say, I don't understand. They were advertising at 0% for, 72 months. And I'll say, well, the fine print was that you only qualified, if you had over a 720 or over a 740, which is hard to achieve. And especially the clients that we see that are referred from mortgage professionals, they are referring it used to be just clients under 580. Right, because those weren't eligible for financing at all. Now what we're seeing is the mortgage professional saying, I need you to speak to my client. They have a 620 and we can give them a pre-approval. However, there's almost no rate that we can offer them because at such a low level, there's, I guess, no margin.
Correct.
Right.
And that's the problem, that it's happened so fast, is where we used to have more flexibility a year ago with our clients that had scores that were not as high as we'd like them to be, and we had more options. But with the market changing, and there's a whole Wall Street piece to it that the general public just doesn't understand why this is the way it is. It's hard to explain, but one of the key factors for sure is how much cash you're working with, how much your down payment is, and what your credit score is will absolutely dictate if we can go into some of those expanded programs to assist in keeping that pre-approval active.
Now, with today's market, there's so much out there in reference to social media, and everybody's watching what everybody else is doing.
Sure.
How much does social media impact your business?
So social media is a lot of our business, and getting the word out of the different programs that are available, because everyone's used to the traditional 30-year fixed program that everybody is looking at. However, there are some other options and there are some other programs in the market. So I like to say that I'm a specialist with first-time home buyers, although I love all buyers and refinance. First-time home buyers is a huge market. And I'm in the Sony May Hall of Fame, which is New York State's first-time homebuyer program. And especially in today's market, with as fast as the rates are going, that program, the rates tend to move slower, and they are well below market today. So that's a great advantage if you can qualify. And there's also down payment assistance to help bridge the gap that these people may not have enough money to go to put the transaction together.
So I'm familiar with Sony May, which is State of New York Mortgage Agency.
Yes.
And they are very well known for their first-time home buyer programs, and not every lender offers those programs. And I know that the reason why I'm so well versed with it is because we get clients that need to be credit qualified.
Yes.
In order to participate in that program. But there are many, benefits, as you're mentioning, with the low down payment, as well as the closing cost assistance.
They marry with it's the best program to marry with any of the other grant programs that are available. So it's always nice to know someone that's a specialist that you can count on to point you in the right direction to know whether you qualify for some of those great programs out there.
Which is wonderful. And when we're looking at Sony May and somebody with a low down payment, are you still seeing that the homeowners are they more willing to accept a Sony May pre-approval than they would have perhaps with somebody with a larger down payment?
It gets a little more challenging, but it is under the conventional bucket, so it's not under one of the true government buckets. So it is a flexible program on that. With the assistance available, it does make it a little bit easier for these buyers to come in, or the seller to feel more comfortable that there's a little more money in the transaction if they utilize the assistance. So I don't really have a lot of pushback with my sellers and the attorneys because we do all the underwriting in-house. So it's not that there's an extra level on it. There's no additional time for it. It goes very smoothly if you know how to structure the program.
I had a client several years ago that we were working with that she had to get her credit up to do Sony May. But not only did she do Sony May, but to just piggyback on what you said, she had gotten a grant from the Suffolk County Consortium. And as a combination, she was able to go in with really a true 100% financing with when you added in all of the grant programs that she took advantage of. And I think people are so anxious to get into a home that they don't take time to necessarily do their homework and their research.
I agree. And there are many other resources out there to marry with the Sony May program when you can qualify. And we're always happy to help them and point them in the right direction of what some of those opportunities may be.
Other than Sony May, I know that, let's just go back 6 months ago, popular programs were the debt servicing and bank statement programs. Tell us a little bit about what that looks like in today's market. Do you find that you're seeing less of those types of transactions because people are holding off? No,
we still have that piece of the market out there. They're a little more challenging because those interest rates were higher than the regular traditional full income check program. So now those rates have even gone higher. So some people are taking their foot off the gas and waiting to see what happens, which may not be the smartest move because we've had some of those clients that say, I woulda, shoulda, coulda, when the rates, they didn't like what we had to say 2 months ago, and now they really don't like what we have to say. So I don't recommend waiting. Get all your ducks in a row, and when the right house comes along, you're ready.
Just due to time, I have one more question for you. Back in the day, we had interest only. Do you
Yes.
think that's going to be something that comes back out and becomes a popular program for clients
The
again?
issue with some of those programs is that Wall Street still doesn't like them. So when these loans are getting purchased by the servicers on Wall Street or backed by Wall Street, they don't like them for fear of what happened before. So your most competitive is still the 30-year fixed or a fixed rate option. It's not as we're seeing it as before. But the other program to talk about quickly is that we do have the renovation program. So if you find a house that may need a little work, we can help you with that too.
Which I love. So once again, we are in studio today speaking with Christine Perlow, producing branch manager for Nationwide Mortgage. And Christine, how does somebody get in touch with you?
They can always call me at 516-509-0429 is my direct line.
Amazing. Thank you so much. I appreciate you
Rhonda.
coming and spending some time with us today. So for all of you that are listening, if you are in need of a mortgage, and especially if you are a first-time home buyer, feel free to contact Christine Perlow, once again, producing branch manager at Nationwide Mortgage. Stay tuned for our next guest.